Hello everyone, good morning and welcome to today's morning report on Wednesday the 21st of January with me, Rich Perry, market analyst at Handtech Markets. These markets are generally just now jostling for position ahead of this ECB meeting. I see interesting move over the last hour or so in the fact that the DAX has just corrected slightly, and that's come on the back of comments from ECB member Eduard Novotny, who basically said that it was interesting how the market was expecting quantitative easing, and it's going to be an interesting meeting on Thursday. Sort of markets taking that as a slightly hawkish comment, and just reined in slightly on the expectations potentially on quantitative easing, but still the euro has remained fairly strong today against the dollar, just slightly higher, about 0.25% up on the dollar today. So there is still an expectation moving into the ECB meeting that we are going to get some sort of action tomorrow. Now, we've had a fairly volatile move on markets in the last 24 hours or so. Wall Street was extremely volatile yesterday in its movements all day, and I'll just show you here the VIX, which is slightly down. Actually, it's had a 5% correction yesterday, and that's come as the S&P 500 has started to form a little bit of support in the last day or so. Also, I'll show you the dollar index, because we had an interesting bit of dollar strength that started to move yesterday, which was breaking through this consolidation band, but we've had a slight move back into the back towards that breakout support of that band, and that's sort of come with this euro strength that we're seeing today. But generally, the dollar has been under a little bit of pressure today with the yen strengthening against the dollar as well. That's pulled dollar yen lower below 118 again, and that's come on the back of the Bank of Japan announcement. Well, not really anything major coming out of the Bank of Japan, other than the fact that they've just slightly cut their targets for inflation, so their projections for inflation in 2015. Market taking that slightly hawkishly in terms of the dollar yen, in terms of the yen. Moving on to what we're looking out for today, we've got UK unemployment that comes out at 9:30. Now, the headline is expected just to dip slightly to 5.9%, and also the claimant count is expected to once again drop by 25,000. So no real shakes there. But the big news, I suppose, would probably be coming around this average earnings growth, which is expected to improve from 1.4% to 1.7%. As wages continue to climb ahead of now inflation, which is inflation at 0.5% in the UK. So wages growth and real earnings growth as well being seen in the UK for the first times, in the last couple of months, for the first time in years on the UK. So that is the interesting takeaway from that UK employment data. Also, we've got housing data for the States. You've got building permits at 130. Also, housing starts. Building permits expected to come in at 1.06 million annualised, and also housing starts at 1.04 million. Slight, very, 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 very slight improvements on both numbers. And we've got the Bank of Canada, which is giving its rates decision at 3 o'clock. No change expected there. Expected to stay as we are at 1%. That takes me to my chart of the day, and we've had a strong gains on gold chart in the last few days, and I thought I'd just take you through silver, because we've had this in the last few days. Really, the silver chart has started to really go and break through some key levels of resistance. Now, we've broken through the 1733 resistance, which was that December high. That now has completed a small base pattern, really, that gives us an implied target of 1910. So we do have some further upside potential in this move, but also we've seen a move above the 1780 resistance, which was the October high as well. So a couple of key highs have been broken through in the last couple of days, and that certainly reflects this improvement that we've seen in silver recently. Now, in terms of momentum, positive momentum on RSI. RSI is at a 6-month high. Also, the MACD line is at a 6-month high as well. So that just goes to show the improvement that we're seeing in this momentum as well. You might want to look probably more at the intraday hourly chart in terms of if you're going to start putting on new long positions, because you can then start to get a gauge of intraday, where the fact that we get some slight intraday corrections on this silver chart, but then they're used as a chance to buy. This just zooming out slightly, it certainly appears as though this 89-hour moving average is a fairly decent basis of support. That currently comes in at 1757, but what I'm looking at is this band of support sort of between 1745 up towards $18 as a nice area of support. So if you saw any buy signal, any correction back into that level, any buy signal within those lines of support and resistance, then that would probably be a fairly decent buying opportunity. That would also give you an unwind back towards this 89-hour moving average. Momentum indicators pretty much across the board all very positive. I like the fact that the RSI continues to come back towards the the mid 30s up towards 40s, and then goes away again. Slightly stretched, you could argue, near term, so maybe there's the prospect of a bit of a near term correction, but I think anything back towards that 50 mark, 50 was where it got to yesterday before it started to move back to the upside again. MACD lines also nicely bullishly configured, so there is a decent bull run at play on this silver chart. So I wish you good luck in your trading today, and I will speak to you later.